So crypto allows you to earn yield, take loans, but unlike banks that do that and keep all the profit to themselves, in the crypto world, we give most of the profits or most of the yield back to the community. So Celsius, as an example, paid the community over $1 billion in yield, and this kind of yield you cannot get from banks.
And how does that work? If you're just a regular investor, you want to get involved in that, what kind of process do you have to go through? Is it difficult?
No, it's pretty simple. You download the Celsius Network app, or you can you also register on our website, and you have to move over your crypto assets. We only accept crypto assets, and you earn yield automatically. You don't have to do anything. You don't have to trade. You don't have to, like a lot of people say, well, I don't have time. All you do is you put the assets in, and every Monday you get yield in your account. You don't have to do, we do all the hard work.
Now, Alex, there has been a number of concerns raised about your model and about what Celsius does, and I want to get your take on a few of those. The first thing is that there was a report pretty recently from CoinDesk suggesting that you're offering uncollateralized loans as part of your business offerings. Of course, that could be incredibly risky. Can you help us confirm if that is the case?
Well, so under-collateralized, not uncollateralized, right? So for retail, 100% of our retail loans are fully collateralized. They actually have, on average, 300% collateral. So because we only offer up to 50% loan to value. But on the institutional side, we have very credible counterparties. They have billions of dollars in a balance sheet. And for those, we have under-collateralized. But we don't offer any non-collateralized loans.
So, are you comfortable with the risks involved in that for the business?
Yeah, look, we've been doing this for 5 years now, longer than anybody else. We have $23 billion in assets. We just raised $750 million round of funding, one of the largest round of fundings in crypto history. And the business is doing very well. This is the only place in the world where the institutions are paying retail fees. Normally, it's the other way around. Normally, your bank or your institution charges you fees and gives it to their shareholders. Here, we are charging institutions fees and giving it to the retail guy, and it's doing good and then doing well, right? So Celsius that's our motto. That's what we focused on.
And just to bring up another part of that report suggesting that some of that investor money is in fact going into perpetual swaps as well, another kind of crypto product. Again, could leave some of that money open to some of the wild swings we see in crypto prices. Can you just explain a little bit about that?
Yeah, so we are what's called a delta neutral strategy, meaning Celsius doesn't bet on the market going up or down. Our job is just to take advantage of difference in prices between, for example, future and spot, or between one exchange or another. And we grab that difference. Again, banks do that all day long. They do it with your money all day long. They just don't take that profit and give it to you. What Celsius does is takes all that profit, most of it goes to our community, and that's really the big difference between crypto and traditional banking. And that's why trillions of dollars are flowing from TradFi into crypto, and Celsius has one leg on the DeFi side, one leg on the CeFi side, so we offer you yield on 53 different assets, and we manage more money than anybody else. We paid more interest than anybody else. We have 159,000 Bitcoin under management, more than MicroStrategy, more than all the big guys that you've heard about.
Does the volatility in the markets that are so often associated with Bitcoin and many of these other cryptos affect your business in any way, particularly if you are trying to get the yield and the market doesn't go the right way?
So again, we're market neutral. So our community is a hodler community, meaning they don't sell their coins when prices go down. The opposite, they normally buy them, right? And that's exactly when the institutions need loans. So the institutions pay higher yields when the markets are volatile, like right now markets are volatile, and when they ask for loans, we actually charge more than when markets are quiet. Our job is just to extract as much as possible out of the institution, and we aggregate 1.7 million users, right, pull them together. That's where the 159,000 Bitcoin comes from. So we have a giant pool, and if they need 10,000 Bitcoin or 5,000 Bitcoin, they can get that in one order, execute, pass yield. We just distribute it to the community. I'm personally the largest user. I have over $200 million on the platform, just like you would have, right? Side by side, we earn exactly the same yield, and my money is sitting with your money. We're all earning it together.
Alex, I want to get your take on regulation, a huge topic for the industry as well. Regulators are looking at all these different business models, different companies, including yours. You know, in terms of yours, you know, there are a few states in the US alleging that you're offering unregistered securities. You've got the SEC carrying out a review as well. Are you expecting any major changes to your business model? And is there a risk here that you come under stronger regulation to the point where you may need to be regulated like a bank?
Yeah, so look, first we welcome regulation. Clarity is a good thing for everybody, right? Our customers want to know what the regulation is. And some countries are running ahead of others. For example, Dubai, Ukraine, El Salvador have very clear rules. Other countries are still trying to figure out what the rules are. In the United States, different agencies. We are monitored by 8 different agencies. With 23 billion in assets, believe me, every day they call us and ask us questions. Are you monitoring the OFAC list to make sure that no Russian oligarchs are giving you money? Yes, we are. Are you monitoring for money laundering? Yes, we are. Are you doing KYC? Yes, we are. So we are a good actor. We always act in the best interest of our community. And regulators are just making sure that we are doing all the right things. But 25% of Americans now hold crypto. Okay, if you're a regulator, you cannot get reelected if you do bad things to crypto holders, right? So all they're trying to do is make sure that all the actors, not just Celsius, but all the people in the space are good actors. And they did shut down some bad actors, people who were pretending to earn yield or pretending to issue loans, and they were just doing rug pulls. I mean, just this year there was over $2 billion worth of hacks and scams in DeFi, and that's what regulators really should be concentrated on. Companies like us are following all the rules A to Z 7 days a week.
Yes.